A very warm welcome to Africa 360. We're the program that scours the continent for news and views you won't get anywhere else. And that is news with a very distinctly African perspective. I'm Chris Maroleng and you're watching Africa 360. In this week's edition, access to formal financial services has been a challenge to many people on our continent. But rapid changes in the sector have resulted in more Africans getting access to banking services. This week on Africa 360, we bring you a panel discussion on the state of financial inclusion on the continent. All this and more coming up right here on Africa 360. Many economic experts are quick to point out that financial inclusion is considered as a major driver of the economic development that we have witnessed in many parts of the African continent. However, access to financial services do remain limited in Africa. But both individuals and smaller businesses are affected by this unfortunate development deficit, especially in rural parts of our continent. The annual Finscope South Africa survey results for 2013 have revealed a significant increase, though, in financial inclusion compared with the same results that were presented in 2012.
No formal banking access, no lending facilities apart from loan sharks, friends and family, and no real way to save money. It's a common tale for many in rural Africa. Millions are excluded from formal financial services. In recent years, banks have made some inroads in getting the unbanked banked in Africa. But lack of awareness of the various services means many still don't have accounts. South Africa has around 5.7 million people regarded as excluded from financial services. It's become apparent that although the economies of many African countries have been growing strongly, it hasn't translated into the financial inclusion of poor people. South Africa's Finmark Trust has been monitoring consumer perception of financial services. That includes measuring the level of access and usage. Its most recent 2013 Finscope survey indicates that although it remains an issue, there's been a significant rise in the number of South Africans with access to financial services products. From 28.9 million people in 2012, the number has shot up to 30.7 million in 2013. This growth is mainly attributed to an increase in borrowing, banking and insurance uptake.
You'll find that poverty, if we measure it in terms of LSM, that's what we do, we find it has been reduced also. Less people are in the LSM 1 to 3, meaning that people have moved from a lower income group to an upper income group.
Another factor has been South Africa's social security grant system. According to the study, millions of people receive grants and use MasterCard debit cards. Additionally, the studies reveal that 3.5 million South Africans are now banked. That's an increase from 67% to 75% between 2012 and 2013.
Overall, there's been positive increases across the board. However, we're still seeing that there are pockets of people who are excluded from the financial sector, and that's going to be increasingly our challenge, is how to engage with these people, how to find the best ways of making what we have on offer as a financial service sector available to them to really, I suppose, help them to better their lives.
Despite the ongoing challenges, the report reveals that South Africa at least is making progress. It's suggesting a multi-pronged and concerted effort of financial inclusion to boost that even more. Central to that approach is financial education.
Well, a very bullish outlook there of the number of people on the continent who are now formally said to have access to financial products. I recently facilitated a panel discussion held in partnership with the Finmark Trust after the launch of the Finscope South Africa 2013 survey late last year. My guests were Dr Kingstone Mutonziwa from the Finmark Trust, Neil Ruetz from the Debt Rescue, and Volker, who is from the Payments Association of South Africa. Also joining us in our discussion was Elizabeth Lwanga-Nanzirir from the South African Savings Institute. We were also joined in that very interesting discussion that I held by Busi Skenjaba from BSK Marketing and Associates. And this is how our conversation went. Take a look. Let me start with you, Kingstone. One of the interesting things about the research that you did in collaboration with TNS Research Surveys was the fact that you also gathered some qualitative data. And what were the key takeouts as far as the Finmark Trust is concerned in terms of those qualitative outcomes that we've seen?
Thank you very much, Chris. In terms of us using the qualitative research, we realized that there was a gap in terms of the quantitative research that we have been using, and we wanted to complement those results. So what we found out in terms of, for example, savings, we found out that we always take it for granted to say people are not saving, yet they have their own perceptions in terms of, the savings. And that was a very interesting result that we found that people, they engage with different ways of savings. And we also realized that there are some issues pertaining, for example, to Sassa, where there are some misconception with the respondents thinking that in terms of the money, if they go and take their money from a bank or from a supermarket, they feel that perhaps they are going to be forced to buy a product.
We've touched on a number of issues, but I just want to focus on this issue of savings before we move on. And I'm going to bring in Elizabeth here. The interesting thing is that we've seen an increase in income, but a decline in savings. What accounts for that?
We think incomes are not increasing as much. People are not really earning. People are relying on grants, and they were relying on families. Under those circumstances, you don't expect them to save as much as they would want to. But the message is there, the desire is there. It's just that the means is not there at the moment.
It's a good place to bring in Neil. Elizabeth referred to the fact that we're seeing increased indebtedness, and this raises the question, the need for definite financial education. And this must certainly go beyond just financial literacy. It must imply that there must be some work done not just by organizations like Finscope, but also the active banking sector in advising people before they enter into these forms of debt.
Thank you, Chris. Yes, that's true. Over-indebtedness is a very big problem, and one way of addressing that is education. Now, I agree that the banks can form a part of that, because we saw that more people have access to banks and to loans now. But can they really afford those loans? Now, the banks obviously have a duty on them to make affordability assessments to determine whether those people can afford those loans. But at the end of the day, the person must decide for himself whether he can afford it or not. And they must take out those loans for the right reasons. Now, we see on a daily basis that because of the financial uneducation of people, that they find themselves over-indebted.
Now, this brings in Busi into the conversation. You've dealt with a lot of people in the informal banking sector, in stokvels, savings clubs and stuff like that. What is the impediment, particularly for stokvels, particularly for people in the informal sector, to become part and parcel of the formal sector using such technology?
Chris, my response will be specifically directed to stokvels, because as I'm saying, I almost live most of my life within the stokvel environment. One of the major impediments, I think, is the culture of money handling within stokvels. The key essence of a stokvel is I bring cash, I put it on the table. And that's what defines what a stokvel is, or a savings club, or a burial club for that matter, because as far as I'm concerned, burial club, savings club, and stokvel are basically one and the same thing. So there's a huge resistance within stokvels to move to electronic banking, in that your money must be on the table. I mean, just on a lighter note, I recently got involved in a family funeral, and then we all had to contribute. I was almost attacked because I did not put 10,000 on the table, because someone said, no, money must sit on the table. You know, that was the agreed contribution. I said, over my dead body, I'm not going to walk into the bank and put 10,000, but that's what is expected. And almost every month, I try to visit one stokvel. You still find them, and I think Rob has observed this, where people circulate, you know, a cash. But yes, we can overcome that. Education is key within stokvels.
Walter, one of the interesting things that Kingston talked about was the fact that we're seeing possible increases in the banking sector due to organizations like the Social Security Agency providing the social net to a lot of people who were previously unbanked, and as a result of this, they're becoming unbanked. But can you talk to us about some of the organic increases that we've been seeing in the financial sector, and whether this constitutes a large portion of this, or is it just, can we just attribute this to the social network that is being created by the government?
I suppose I'd have to speculate here a little bit, because I wasn't party to the actual research, but I must say, just talking about the Sassa role, I do think it was very positive, because in the past, I think the Sassa grant recipients were all part of a closed loop environment. You know, fingerprint biometrics, although that's been sort of transferred into the more open system, it has given a feel and an experience of the formal banking environment to a lot of social grant recipients that never had this before. I think generally it's been a very positive experience. What is a little bit concerning probably is the fact that there's an overlap of over 40% who use both Sassa and another bank account, which possibly speaks to the fact that they're worried that if they leave their money in the Grindrod bank account, it's going to be taken back by the government at some stage. So it's probably safer for them to draw all that money and put it into another bank account. So I think that's probably a challenge we have to deal with.
Education is key, but the challenge is if you take the financial institutions, the banks, to go and do financial education, they end up doing marketing and promoting their product.
How can we begin, advising people about this fact that their savings as is aren't at risk? What needs to be done? What can be done to go out there to let people know that?
I think there's a huge education and awareness process that still needs to take place. I think part of it is probably just using it and sort of over time. I think that knowledge will come through. But I still think more can be done.
Let me bring you into the conversation, Kingston. One of the key things that are beginning to emerge from the research that you are doing at the Finmark Trust is the importance of remittances. And we saw that particularly after Marikana, where we saw some of the miners who were affected actually having families outside of South African borders. Tell us a little bit from your research. How do remittances get taken to other countries outside of South African borders? Does it go through the formal sector in the main? Are we seeing informal ways of moving money that is known as remittances?
We realize that most of the cases, people like to send out money informally. And, some of the reasons that could be attributed to that is that some of the people that want to send money across the borders, perhaps they do not have, the right documentation and things like that. So it's actually very easy for them just, to go and give the money to a bus driver, who drives across the borders. And, what we also realize is that, there is some element of increase in terms of formal remittances. I think one of the important things that I have observed is Standard Bank. I think they came on board. They have a product that they call Instant Money. And I have been speaking to quite a number of people. It's quite an innovative product, very easy to use. But I think what we realized is that, in terms of remittances, people are still using quite a lot of informal mechanisms to send.
Oh, interesting here. I just want to open up the floor and get some questions from the audience who are joining us here. There's a gentleman over there who's been desperate to get into the conversation. Sir.
I think I'm one of the guys who is from the village, and I understand the Stokvel, as Busi has already mentioned. The biggest challenge with the people who does not take their money to the banks is because of the processes that the banks have when they need their money. And also the other fact is that most of the time the trust with the banks, the people still does not have trust in the banks because of the charges that they get from the banks. And it boils back to education. I think education is key, but the challenge is if you take the financial institutions, the banks, to go and do financial education, they end up doing marketing and promoting their products.
Thank you very much, sir. So, Sis Busi, do you concur with what has just been said?
One of the programs that I've launched within the Stokvel is the Stokvel Academy. And to me, a Stokvel Academy, it's a two-way process because Stokvel members, remember one of the last studies, it said 44 billion circulates within Stokvels. And how much knowledge do those Stokvel? Because Stokvel members are omnipresent. Sassa beneficiaries belong to Stokvels. Almost all these people that we're talking about, one way or the other, belong to Stokvel. But is there any structured program in South Africa that actually educates them about their relationship with money? It's not just how to spend. So if we're to sit down with the academic people, we need to draw a curriculum of educating Stokvel members, burial club members. It has to be well structured, like any other educational programs, but it has to be a two-way process to respond to the gentleman. The financial institution also need to subject themselves to that education process, where they are actually educated, not in a platform like that, about the needs of the Stokvel members. So I would be happy to see the Stokvel Academy serving both sectors.
Okay, let's just take two more questions from the floor, and then we'll ask our panel to wrap with their final remarks. Yes, ma'am.
In terms of what governs firms' ability to implement garnishment orders, because anecdotal word that I had was that garnishment orders were being processed before individuals had even defaulted on interest and loan payments. And Bobby Godsall's anecdotal evidence seemed to corroborate the story in terms of actual take-home salary as a result of over-indebtedness, and what responsibility we place on the financial sector, particularly micro-lenders, for assessing risk and curtailing loans that are in fact irresponsible.
Well, with regards to garnishee orders, there's a specific process that has to be followed in order to obtain that garnishee orders. Now, I don't know whether that is what you are referring to, but we've seen in courts, unfortunately, that you get fraudulent garnishee orders granted, and those are the garnishee orders that's granted even before somebody has defaulted. In terms of South African law, it's impossible to legally obtain a garnishee order without somebody having defaulted. But that is a process where you can get an order, court order against somebody without going through the long process of issuing summons against somebody and so on. If you follow the right procedures, you can do it, but unfortunately we're seeing fraudulent cases happening. Now, we feel that employers should also assist consumers in that regard, where a garnishee order is instituted against somebody's salary. I think they must, do proper investigation to make sure that it is a legal garnishee order, first of all, and then second of all, the consumer must also apply his mind and make sure that he did in fact take out that loan, he did in fact default on that loan, and request the necessary documents to confirm that that garnishee order has been obtained legally.
Thank you very much.
I would like to challenge any bank that can actually give a demographics profile of one Stokvel account that they have. It's because they don't have a relationship.
I'd like to call upon our panel to give their final concluding remarks, and I'll start with you, Kingstone.
Right. From me, I'm very happy in terms of the figures that we are finding for financial inclusion. But I think what we need to really push is issues around, deepening financial inclusion. And I think we also have to make sure that, we get quality financial inclusion, because, what we tend to observe is that, we tend to push numbers. And once we, for example, reach, figures like, 80%, 90% financial inclusion, so what? So we need to look at, issues around, deepening financial inclusion. And, there are quite a number of, initiatives that, one can evaluate. And the other thing that I also need to point out is, I think the key thing that we have been talking about here is education. But I think we need what we might call quality education, and speak to the target that you want to educate. Because at times, you say you want to educate people, but they seem not to understand, what you're talking about. So I think we need to be very simple and make sure that you relay the right messages. And also, the last thing that I want to talk about is in terms of we need to continue, especially our stakeholders, innovating, bringing new products into the system, and save our community out there. Thank you.
Thank you very much. Ma'am.
Okay, thank you. I would like to appeal to the sector that is targeting primarily the stokvel market, at least to have a relationship marketing program, so that we can be able at least to come up with programs that are relevant. Because if you don't have a specific relationship program like other sectors of your customers, I think you'll be dealing with people that are sitting in a dark corner within your system. You don't know who they are. They are there, but you don't know who they are, because you don't have a relationship program. I mean, there are people who are corporate affairs and all that, but I would like to challenge any bank that can actually give a demographics profile of one stokvel account that they have. It's because they don't have a relationship. So I think we can achieve this by having a relationship program with the sector.
Thank you. So.
Yes, thank you, Chris. I think apart from the fact that we are moving in the right direction as a country in terms of the figures, there are probably three areas that we at the Payments Association of South Africa like to focus on in the next year to play our role. The first one is probably to assist Sassa to create better awareness of their own social grant recipients, and to make all those social grant recipients able to access the general payments infrastructure as much as possible. That's one. The second one is probably to achieve interoperability between the various closed-loop money transfer systems. I think currently we've got about 7, 8 closed-loop money transfer systems. If we can achieve interoperability between those, it'll be far better for the consumer. And then thirdly, I suppose, is finding a way of more easily transacting with a mobile phone, again across banks, so that citizens don't have to go to an ATM and draw cash. They can do a transfer with the mobile phone. Thank you very much.
Thank you. Government can't do things alone. Can we now, as we're seeing so many people coming into the formal sector, especially for credit, can we work out something which I've seen happening in the other developing countries, whereby as part of the repayment for their loans, a portion of it goes towards saving, so that somebody is repaying off date, but there is a certain amount that goes towards saving, and that on its own works as some form of collateral. As it builds up, this person is able to maybe acquire a bigger loan of some sort. If it's happening, I'm one of those that don't know, but that could be another way of, the paternalistic approach. While government does it on the long-term saving, we can do it, seeing that many people are now coming in here.
Okay, Chris. I just want to leave people with a short message, and that is that there's help out there for people who find themselves over-indebted, and that is in the form of debt counselling, which was instituted and implemented by the National Credit Act, which was done actually to help people who's over-indebted. So we feel that it's important that people know that there is help out there, and if they do find themselves in a situation where they are over-indebted, then they must contact a debt counsellor sooner rather than later.
Thank you very much. I think that's an appropriate place for us to end this conversation. Just want to thank our panelists for sharing those key insights with us today. Some fascinating insights there into the impacts of financial inclusion, particularly in South Africa, but certainly for the rest of the African continent. That does bring us to the end of this edition of Africa 360. We would certainly like to thank the Finmark Trust for organizing that panel discussion. And we certainly hope that even this year, we will see more and more people on the continent getting access to formalize financial service products. You can join the debate on Africa by liking our Facebook page or tweet us your views at A360_ENCA. You can always also send us an email at africa360@enca.com. So until next time, when we look forward to bringing you Africa like you've never seen it before, do take care.